All right, guys, welcome back to the channel. And in today's video, I am going to explain why I transferred $180,000 into Composer. I actually transferred that money from Interactive Brokers. Before I get into it, it's been a little bit for a video. I've been very much engaged in my real estate holdings. I'm actually working on right now it's just that, it's perfect. A deal in North Carolina that I'm going to do as a short-term rental. So, as many of you know, I've learned the long-term real estate game from Grant Cardone, Robert Kiyosaki, cash flow, cash flow, cash flow. And I've been learning the short-term real estate game from a couple people, the Real Estate Robinsons, Short-Term Rental University, Richard Furtag, who I think actually in his early career worked at Blackstone. So I don't know if he worked with Schwartzman and Pete Peterson and Jonathan Gray and those guys over there. But he transitioned into the short-term rental. He has rentals in Jackson Hole, Wyoming, the Outer Banks in North Carolina, and some other places. Very, very interesting channel, informative. So Real Estate Robinson, Short-Term Rental University. Another guy, Rob built, and the last one, Airbnb Automated, Sean Radicic, which he does the arbitrage, where he doesn't own the real estate, he rents it from the landlord and then rents it out short-term rental and gets the difference essentially. So just been kind of consuming that content and just trying to learn as much as I can on that. But yeah, I was in North Carolina. I'm actually leaving for North Carolina again on Sunday to continue working on this deal. And the idea is this one is going to be a short-term rental. So I have 24 long-term rentals, and this will be a short-term rental in the mountains of North Carolina. So anyway, so that's that. But let's get into the topic at hand. Why I rolled $180,000 into Composer. You can see it here now. I have, I used to have like 30 in this account and then up to 150, and now you see it's 270 here. I actually had a lot of this capital with Interactive Brokers, and I know that Interactive Brokers is generally considered the most sophisticated broker, for serious traders and so on and so forth. I just never really liked the back end of their software. I would log in. It was kind of like, to me, antiquated and clunky and difficult to use. I know they had their trader workstation. Again, just the graphics on that just looked old. Looked like it was built in the mid 1980s or something. So I just never really liked Interactive Brokers. And what happened actually is this: I had my holdings in Motif, and Motif was similar to Composer in a lot of ways, or like M1 is also similar to Motif, where you can build some sort of basic strategies and you can rebalance those strategies. Motif called them Motifs. M1 calls them, I think, pies. Neither of them are on the same level as Composer as far as the sophistication and strategies you can build, but it was still, kind of like a quarterly rebalance on some holdings and such. But anyways, Motif got purchased, I believe, by Schwab, and so all the assets were rolled into Folio. Folio also had the capabilities that Motif had as far as the rebalancing and such, but then Folio closed or was purchased, and so the assets were rolled into Interactive Brokers, and in Interactive Brokers, it was just really, really messy in there because I had all these random positions that previously were organized into neat motifs and folios, basically, and now it's just a massive list, sort of a laundry list of positions. So what I did is I actually run two main strategies. I run a balanced alpha, all weather. I run a balanced alpha 3 times leverage and an all weather alpha 3 times leverage. So I created 2 sub accounts. So I had the one big account, which is quite messy, and I kept that until recently. And then I would manually run those 2 strategies, the all weather alpha 3 times leverage, the balanced alpha 3 times leverage. And it was just annoying because I would do that manually. I have to go in and sort of tally what percentage should be held in what position, sell, buy, and I would do that a couple times a year. It was just, again, quite annoying. So what I actually did is I actually liquidated the 80,000 in the main messy account, so to speak. And I'm actually using that 80,000. I'm pulling it out of the Maneos compounding machine, and I'm actually using that for this real estate deal in North Carolina. So I actually liquidated all the positions and transferred it back into my checking, and that's going to be for some of the closing costs and projects in the property. But then the other two sub accounts, and each sub account was specific, so I was able to work with Ronnie at Composer to facilitate this process. I was able to roll the one sub account, which was running Balanced Alpha, into Balanced Alpha that I had recreated in Composer, and the same with All Weather. So they just kind of went neatly into the same exact strategy, but this time it was organized in Composer as opposed to having to do it manually. So you can see here, and I actually am filming this video, and I kind of wanted to time it at around the time the Fed is going to announce its decision, because I wanted to show kind of volatility in markets. You can see it's been a big up day right now. We can go, actually, let's just go into TD Ameritrade here. Just switch screens for a second. Yeah, I mean, you can see in TD Ameritrade, I'm up this almost $9,000 here, and then several thousand in Composer. The other nice thing about transferring into Composer is now I have pretty much two main accounts. I have my TD Ameritrade, which is 480 or so, and then Composer, which is, let's see, 272. So 752 in these two accounts. And I actually liquidated a very, very small M1 account also for that real estate deal. It was about 3,000. So it was about 80,000 in Interactive that I liquidated, and 3 in M1. Just trying to streamline everything, make it much easier for me. But yeah, so let's scroll down here, and I can kind of show you. So you can see, like, I put about $2,000 in a lot of different strategies. Some I've created, some have been shared in the Composer Slack channel. But you'll see the bigger ones here, like 80 some thousand. Let me just keep scrolling. Okay, so this is Balanced Alpha here. You can see there was like 2,000 in there, and then 86 or so was transferred in. Balanced Alpha today, we're in an update here, is up to over $2,000. 2.79%. And then we're going to go to All Weather. And there it is. So there was like 2,000 in there. So I added about 72. And this is also up 2% today, about $1,500. So those are the two. Again, I had a sub account in Interactive Brokers for each, and now they're, I think these are quarterly rebalances. So now I don't have to think about it. It's all set up in Composer, and it's going to execute seamlessly. So yeah, so that's that. What I actually wanted to show, and you can see, let's see here. So far, I don't know if the decision has been announced. Maybe we can pull up CNBC here. Oh, little typo. So I don't know if it's been announced just yet. Let's see here. Yeah, so 75%. So it was what the market expected. I kind of wanted to time it with this video to see if there was something that was done unexpectedly. Then basically, you could see, like, let's say the market, I was up 5,000, then I was down 5 or 10,000, and literally a snap of fingers. So it was good that didn't happen in a way, but I just kind of wanted to time it. But let's get into a couple things here I want to show in Balanced Alpha. So I'm gonna switch over to this screen. I know I'm jumping screens on you guys here a little bit, but just wanted to showcase this, and this is kind of ties in with my overall investment philosophy. So I always think long term, and I judge things long term. I don't do day trading. I don't do swing trading. I know that there's a lot of channels on YouTube, and especially for younger people, millennials, you're attracted to these things, day trading and swing trading. And there's actually an excellent book, founder of Vanguard, Jack Bogle, called the Clash of Cultures: Investing Culture versus Trading Culture. And you might say, well, that's kind of hypocritical because you're in composer, which is allowing you to do trading, so to speak, as opposed to just maybe buy and hold. And I would counter that with, the thing is though, on the composer strategies, some of these strategies are back tested 20, 30. Actually, there's one strategy that I use that someone on Seeking Alpha back tested in 1926. Some are back tested at 2000, so they're 22 years. Some are to 1980, some 10, 12 years. And but I wanted to show the volatility here in balanced alpha and all weather. So if someone looks at this, let's go year to date in balanced alpha. Okay, so we're January 1st till now. So you can see, look at that, 73.9%. Let me say it again, negative 73.9% year to date. Some people are like, oh, this strategy doesn't work because they have a short-term mentality. And one of the things that Warren and Charlie at Berkshire talk about is, just by having a long-term mentality, you're going to outperform people who have a short-term mentality, a day-to-day, day trading mentality, a quarter-to-quarter. Oh my God, this is earnings release. What's going to happen on this earnings release? So that's year-to-date on this balanced alpha here. But let's go back a year. And so now, okay, so it's negative 49%. We're going back to July 26th of 2021. Okay. Now, and you can see it's underperformed the S&P, which is negative 10. Now let's go back 3 years. Okay. So now we're looking at, okay, now we're in the positive territory. We're at 12.9%. Remember, the average long-term return of the S&P 500 index, generally people are going to say 7 to 11% over the long term. So you're at 12.9 here. We can look at against all weather, so it looks like it's coming in. All weather is the most here at 47, then balanced alpha 43.99, and then SPY at 34.65. Okay, so now we're going to go, let's go back a little further. Let's go back to 2016. And what I'm trying to do is prove, there's a quotation of mine that people have shared on Twitter and elsewhere. And it's, the ability to deal with volatility is a superhuman power in investing. Let me say that again. The ability to deal with volatility is a superhuman power in investing. And Jack Bogle, Warren Buffett, Charlie Munger, they've talked about this a lot. Like, if you can't deal with volatility, you should just stay in treasuries or just put your money in a checking account, because volatility is part of, I believe that Jack Bogle said something effective. In an investing lifetime, you should expect your investments to go down 50% on 2 or 3 different occasions. So you think in the last time period, if you were invested in 1999, 2000, there was a big sell-off there. Then 2008, 2009, and then COVID 2020. But so now we're going back to 2016. So let's take a look at where we are. Look at that, 17%. So now balanced alpha is ahead of the pack, 166 versus 147 versus 100 for SPY. So let's go back further. Let's go back pretty much 10 years. Yeah, actually almost exactly 10 years. July 27th, 2012 to July 26th, 2022. So 10 years. Now look how interesting it gets. 21.3. So look at that, with a Sharpe ratio of 0.83. 10,000 turns into $68,000. Now, this goes back to another truism from studying great investors, and that is, if you can compound capital in that 20 to 30% range, it places you in the 1% of investors, because you look at the best investors, you look at people like Peter Lynch and Tepper and Icahn and Buffett and Munger. They're in the 22, the 29, the 26. Monish Pabri, his license plate, Mr. 26%. And so when you start compounding, you can see over 10 years, this is, it's basically doubled twice. If you put 10 in, it doubled to 20, and then the 20 to 40, not that third double, but, you're getting fairly close there. So why did I show this? Why did I go back and show this? Because if you look at this from a year to date or 1 year basis, you're saying, oh, this is an awful strategy. Why would I'm down 80% or I'm down 60%? But again, it kind of goes back to, if you can stay the course, if you can look at things long term and find strategies that over the long term give you alpha over 10 years, 15 years, 20 years, 25 years, 30, so on and so forth, you're likely to be in a good place. But if you're impatient, if you have the soul of a trader instead of an investor, then you may not have the patience for this 21%. And so that's kind of what I wanted to showcase here and display. And only Composer offers this, by the way. I can only do these things in Composer, this type of back testing and comparison and charts and graphs. I mean, Portfolio Visualizer a little bit, but it's much more limited. And then they also have, which is really cool, is the fees and slippage, which is, and they define it here as the estimated difference between hypothetical trades and actual trades that pay bid-ask spreads and experience price movement. So it even accounts for some of those things as well. So I hope that's instructive, and I hope you're able to see. And let's just, before I sign off here, you look at this year to date, and you're like, oh my God, 73.9%. But when you go back 10 years, you're at 21, which puts you in the 0.01 of the 1% of investors. So, but yeah, any comments, questions on that, let me know. And yeah, I'll be heading to North Carolina on Sunday for 10 days or so. So I won't be doing a video up there. I'll be filming stuff, just, but not for the channel. And then when I get back, I would like to do a video. But let's actually see if anything's changed in the market. No, it looks like kind of we're in the same place, as I started the video. So obviously what Powell announced and is saying hasn't spooked anyone, and hasn't also caused a massive run up. It's kind of where it already was before the announcement. So anyways, guys, thanks so much. Talk soon. Take care. Ciao.